Hi, I'm Tom Hoskyns, editor of Mining Journal, and I'm here with Chris Frostad, who's the CEO of Purepoint Uranium, which is a Toronto headquarters uranium junior. Hi, Chris. How's it going?
Good, thanks, Tom.
Excellent. So your company, Purepoint, has become very well known for its Hook Lake partnership with Cameco and Orano. Just talk to us a little bit about that to kick things off, please.
Sure. Hook Lake is a project on the western side of the Athabasca Basin, which is in northern Saskatchewan, Canada. And it's over the last few years, that area has been quite an area for discovery. Our neighbors NextGen and Fission have defined out over 350 million pounds of uranium in recent years. So Cameco and Orano have been highly supportive of that project. It's a joint venture between the three of us. We own 21%, and they split the remaining share and interest in that joint venture. And we're all sort of working a common geological trend over in that area. It's been very supportive over the last few years, particularly during a time when uranium was not necessarily in favor like it is right now, and capital was hard to come by. So they've been great partners from a financial sense and certainly from a technical sense. But now that things are a little bit more upbeat in the uranium side, we're actually going back to our larger portfolio of projects. We have a number of 100% owned projects. We've got 12 projects in all, most of which we sort of pulled the gas back on a bit a few years ago because the markets made it difficult to raise money, weren't interested in us spending money in the uranium sector, and so we sort of put those projects to the side while we focused on Hook, where there was a lot of discovery going on. But in fact, those projects we've made outstanding discoveries on in the original years of developing them. And over the last few years, we've been identifying other projects that have been available while we've been waiting for this turnaround or tipping point that we're seeing in uranium prices. So we have a number of 100% owned projects, all of which we've identified uranium that we're going to be following up on. And then this coming year, we'll be doing a lot more work and a lot more energy on those projects and advancing them along.
Yeah, I mean, so uranium's obviously been really interesting of late. We had Sprott come in over the summer, and the prices started to move, which uranium bulls have been talking about for quite a while. But finally seems to be coming to pass. I wonder if you could talk about the challenges that brings. And clearly, a lot of money coming into the space, but yeah, what else? What are the potential downsides to that, if I may?
Well, yeah, certainly over the last year, we've seen probably more money come into the uranium space than we saw in the previous 2 or 3 years. As you mentioned, the Sprott Physical Uranium Trust kind of took over Uranium Participation Group in July of this year and started buying uranium on the spot market on a regular basis. And what that did was sort of tighten up that market that isn't typically all that transparent, because we've all been waiting to see when the long-term contracts would start being written. But as long as there is adequate spot inventory available, that wasn't going to happen. I think what the Sprott Fund did was identify that we are kind of at the bottom. It's not an endless pit of discretionary uranium, and we're starting to see some of those contracts being written. As a result, we're seeing a lot of investment starting to come into the sector right across the board, which means that we're all getting busy again, all at the same time. So the difficulties as we now sort of pull the sheet on a lot of projects and start to get back into the field, there can be difficulty finding drillers. There's difficulty finding crews, finding helicopters, finding geologists, et cetera. So the demand for all of those resources to actually get back to work is really tightened up. And that's one that we've been able to keep ahead of, mainly because of our existing relationships that are already in place and have been for some time. But that has been causing a fair amount of trouble out in the field. On top of that, there's a permitting issues. A lot of people weren't ready to get right out again, so they started that permitting process, which can take months. And then a lot of the consultation with the northern communities has become more I guess, systematic and a little more organized than it might have been in the past. So that's added some time. So it's as the money comes in for us to get out there in the field, for a lot of our peers and a lot of folks, it's been difficult to just hit the ground running. We were fortunate that we already had a lot of our permits in place. We already had those relationships in place, and so we've been very, very busy this year, and we will be continuing that in the coming year.
Yeah, I was going to say, what's sort of top of your to-do list for the next 6 months or so?
Well, right now we're drilling at a project called Henday Lake. It's a project that we've held for some time, but again, we've never drilled it. We've been waiting for the right time to be able to apply the right amount of funding against it, and that time has come. So we have that drill program going on right now, and we recently announced that we're extending that program because, in this case, again, going back to the difficulty with drills and things, we were working from a window of opportunity. We had to actually use that drill, and it widened up a bit, which has allowed us to continue drilling probably into December of this year. In the new year, we will be working on a number of things. One is Red Willow, which is a huge project we have over on the mine trend on the eastern side of the basin. We've got a number of targets there that we've drilled previously. We've found significant amounts of uranium that we're following up on, and hope to be able to expand on those that we've identified. There's a project called Turner Lake we'll be drilling in the coming year, and it's on trend with what's known as the Little Rock Corridor. Cameco, Orano both got huge discoveries there, 39-40% uranium. And then most recently, ISO Energy discovered their hurricane zone along that same trend. So we're in that area, and we'll be back up drilling there as well. And then, of course, at Hook Lake, we're focusing this year more on more of a western trend in that area called the Carter Corridor. We'll probably be doing some preliminary geophysics and activities out there in preparation for a proper drill program in that one. So on top of that, we have other projects that we'll be doing preliminary geophysics and surveys over in the coming months and getting them ready. So we have a lot of things in the pipe, and we're moving them all along at a pretty good clip.
Okay, great. Sounds like an exciting time. I mean, clearly at the moment you've got a load of juniors, all uranium juniors, all putting their hands up and saying "pick me" to investors. Could you? Well, I mean, I know you're not going to be entirely impartial, but maybe offer some words of advice for investors looking at the space, maybe for the first time in a few years. What should they be looking out for?
Well, it is interesting. When we first got involved in the uranium space in Saskatchewan was sort of the last boom time that came around, and it got a bit crazy at that point. There literally hundreds of uranium companies out there staking property and raising money and doing work out there. Over the last 10, 15 years, as again, uranium fell out of favor for some time, we've seen most of those go away. And I think if you go back maybe 10 years, if there was maybe 10 or 15 of us, or no, there was 20 of us maybe doing field work out there, there's 4 of us left. So it's been difficult for people to maintain their relationships out there and their projects on an ongoing basis. And so they haven't been involved as much in a lot of the ongoing learnings and understandings of things. There's been a lot of new discoveries over the last 10 years, even with the light amount of work done out there. So I think what we're going to see again, like we did the first go around, is going to be a lot of newly minted uranium companies being established, people with different thoughts and ideas and different theories as to where things should be, and hoping to find the next big discovery up in that area of the world, which is highly prospective. And I think investors need to watch for the history of these companies. There's a number of us and a number of other companies that have been up there for a while, have got very, very good projects in tow, and can demonstrate that they have that ability to go out and make discoveries and find uranium, that they're not just re-drilling old projects that got left behind before, or just drilling off new greenfield sort of stuff. So there will be a lot of new companies being established, but I think there's enough well-established opportunities out there, both of the producers and the developers and in the exploration side, that any investors getting involved in uranium right now should be looking for experience. They should be looking for well-established projects and quite frankly, should be mixing it up a bit.
Yeah. Okay. Well, just one final one, because so we're recording this, middle of November. Kazatomprom a few days ago came out and said that they'd signed term contracts with a couple of big Chinese players. I wonder if you feel like this is the time when utilities come in and start recontracting, and that's the thing that takes the price up to 60 or the incentive level for a lot of these projects. What's your
right
view?
Well, I mean, the incentive price for uranium is probably north of $55, $65, $65 in that range. That's the range before we're going to see mines being reopened or new mines being built. And over the last 10 years, we've seen a lot of resources and production shut down or closed down, to the point where in the last 5 years, I think we've been producing 20 to 30% less uranium than the reactors around the world have been consuming. So while we've been trying to rebalance things in the supply demand side and get our inventory in shape, we've seen a lot of that coming off. When we see, so our expectation would be that we start to see those contracts coming back online. What is not visible is to the pricing. In that particular announcement you mentioned, they did not release the terms, and the uranium market is not that transparent. About 15% of the pricing is on the spot market, or the uranium that's bought and sold. The rest of it is in contracts, but only about 25% is actually tendered out and reported by these utilities. 60% of the uranium that is bought and sold, the terms are never released. So we don't really have the visibility into a lot of that. It's all off market. So it's large utilities going to the likes of Cameco and signing up long-term contracts. And those contracts are not necessarily announced and reported like the Kazatomprom situation with China.
Okay, Chris. Well, that about wraps things up, I think, for today. So I'd just like to finish by thanking you for joining us.
Thank you very much for having me.
And thank our viewers for tuning in. And that concludes this video for Mining Journal. Goodbye.